Ghost kitchens, remember that buzz? I mean, just a couple of years back, it felt like they were going to completely upend the restaurant world.
Oh, yeah. Total game changer talk.
Right. Fueled by lockdowns, obviously, closing dining rooms, and then this huge flood of VC money chasing, the next big thing. Plus, delivery was just exploding anyway.
Absolutely. Everyone was talking cloud kitchens, virtual kitchens, dark kitchens. Even the names sounded, well, futuristic.
Yeah, they did. And the promise was this, lean, super efficient food service revolution.
It really was a moment of crazy acceleration, wasn't it? And our sources, they really dig into how the pandemic created this unique situation, almost like a perfect storm, but maybe a misleading one.
How so?
Well, one analysis we looked at calls it a false positive, which I think is spot on. It basically pushed this incredibly fast growth, tons of investment poured in before a lot of the fundamental operational stuff, the economics, are really figured out.
A false positive, that really captures it. Because after that huge hype wave, we saw a pretty dramatic shakeout, didn't we?
We really did.
Pioneers just burned out. Big names suddenly pivoted hard. And the whole landscape started looking less like a revolution and more like, well, frankly, a bunch of failed experiments. Cautionary tales, really.
Exactly. The market corrected itself. Often, pretty brutally. That temporary pandemic boost vanished, and the underlying economics had to stand on their own 2 feet. And for many, they just couldn't.
So what really went down behind all that hype, if you peel back the headlines, what are the actual, the gritty investment realities, the operational facts for these delivery-only kitchens, specifically here in the U.S. right now?
Well, that's what we're diving into today, right? Using these sources you've gathered.
Yeah, that's the mission. We're going to try and cut through the noise, look at the numbers, the real challenges, some unexpected twists, and just figure out the current state of play and maybe where it's headed. All based on the data and insights we've got here. Ready to unpack this?
Let's do it. And maybe just to kick things off, let's make sure we're crystal clear on what we mean by ghost kitchen. Because there are a lot of terms floating around.
Good point.
At its simplest, like the sources define it, it's a commercial kitchen, a facility built specifically for making food. But the key difference is its only focus is getting orders out for delivery or maybe takeout.
Right. No physical customer interaction at the kitchen. That's the core thing. No dining room, no counter to walk up to, no host greeting you. It's purely a production hub connected to people digitally. Delivery apps, websites.
Exactly. And like you said, lots of names for this cloud kitchen, virtual kitchen, shared kitchen, dark kitchen. They all point back to that same basic model. A food prep space optimized purely for delivery.
And okay, the pandemic definitely turbocharged their visibility, right? Suddenly, dining rooms were closed. Everyone was doing delivery, it felt like. But the sources are pretty clear this wasn't just a COVID thing.
That's a really important point. The pandemic was, a massive accelerant. It drove that immediate crazy spike in delivery demand. But the underlying trends, the things really propping up the ghost kitchen idea long term, they were already happening and they're still growing.
Like what specifically?
Well, think about it. Increasing digitization of, everything. Smartphones in basically everyone's pocket, making online ordering super easy. Just a general reliance on tech in daily life. And maybe the biggest driver, this shift towards a convenience-first lifestyle.
Especially younger generations.
Yeah, particularly millennials and Gen Z. They're just really comfortable ordering anything, prepared food included, with a couple of taps on their phone. It's normal. So the foundation was already there.
Okay, so the foundation was being laid, pandemic hits, puts a rocket booster on it, which leads to that false positive situation where the growth just outran the operational maturity.
Exactly. Growth before the model was really proven out at scale.
Speaking of scale, how big are we actually talking here? What do the sources say about the market size?
Well, the backdrop is the huge online food delivery market overall. Globally, estimates put that at $150 billion back in 2021. And what's wild is that it apparently tripled just since 2017.
Tripled in 4 years. Wow.
Yeah. And ghost kitchens are a slice of that pie.
Yeah.
The sources estimate that slice is currently worth around $43 billion.
$43 billion right now. That's a pretty hefty segment on its own.
It really is. And looking forward, the projection is for that to keep growing. The estimate is maybe $71 billion by 2027. So yeah, there's been turbulence, a lot of it, but the underlying market potential, based on these numbers anyway, is still seen as pretty significant.
Okay, let's get into that turbulence then, that roller coaster ride, the shakeout you mentioned. It really does feel like we went from peak hype straight into this period of reckoning. What actually happened there?
It sounds like it was just a period of incredibly intense competition colliding with business models that just weren't sustainable. That first wave of money, the pandemic demand, it pushed companies to expand like crazy.
Too fast.
Way too fast, often. Prioritizing speed and scale over actually nailing the economics, the operations. Then the pandemic eases up, people start going back to restaurants, spending habits shift, and the ghost kitchen sector, as one source puts it, was kind of largely left behind.
And that competition really started to bite.
Oh yeah, suddenly everyone's fighting for the same delivery customers, and the pressure on profits became immense.
And we saw some big names stumble, right? Or
Yes.
completely change course.
Absolutely. The sources point to several examples. Kitchen United, remember them? One of the early big players. They ended up selling their core IP to Sam Dazarian C3 Group,
Right.
REF Technology. They had huge ambitions, lots of partnerships. Reportedly lost several key deals, even Mark Lohr's Wonder, which got massive funding.
They were doing the food prep in the vans,
Right.
right? Delivering right to your curb.
That was the initial model, yeah.
Yeah.
They pivoted significantly, moved towards something that looks a lot more like, well, traditional brick-and-mortar stores alongside delivery. And the sources also mentioned Butler Hospitality just dissolving abruptly in 2022, a real cautionary tale about how quickly things could go wrong if the model wasn't solid.
So who actually made it through? Who's consolidating power now after that shakeout?
Well, the sources suggest the market definitely consolidated. A few major groups seem to be the key players now. You've still got Sam Nazarian's Influence C3, Kitchen United, NextBite Virtual Brands, all seem connected there. Mark Lohr's Wonder, even with the pivot, is still a big force, lots of investment behind it. And of course, Cloud Kitchens, the one often linked to Travis Kalanick, still a major infrastructure player.
It's interesting that even the ones who had to pivot dramatically, like Wonder, are still considered major players. It says a lot about the sheer amount of capital involved.
It really does. And the potential they're still chasing, even if the path looks different now. And the market data reflects this tough period. Sources show industry revenue actually declined between 2020 and 2025.
It declined, even with all the delivery growth overall.
Yeah, the compound annual growth rate, the COGR, was negative 2.2% for that period. Just to clarify for listeners, keyed AGR kind of smooths out the ups and downs to give you an average annual growth rate. So on average, the ghost kitchen market actually shrank each year then.
And the most recent year, 2024, was even rougher.
Apparently so. An estimated drop of 5.2% just in that year. But, and this is important, the story doesn't end there. Looking out over the next 5 years, 2025 to 2030, the sources are projecting growth again.
Okay, so a rebound predicted.
It suggests maybe the shakeout cleared out some of the weaker models, and the survivors, or maybe new players, are better positioned now to capture market share as delivery keeps growing. The big question is, what lessons did they learn? Can they actually crack those fundamental economic hurdles this time?
Which brings us right to those hurdles, especially costs. This is where the whole ghost kitchen promise was so appealing, but also where things got really difficult. Let's talk bottom line. How do the costs really stack up against a traditional restaurant based on the data?
Yeah, the sources lay out a really stark comparison. It shows the theoretical advantages pretty clearly. Take real estate footprint. A ghost kitchen might only need, say, 200 square feet. Tiny. Compare that to 2,000 square feet, maybe more, for a traditional restaurant with seating, bathrooms, front of house.
That's like a 90% reduction in space. Huge potential savings on rent.
Massive. Then staffing. Another huge difference. A ghost kitchen, just focused on cooking, might run with maybe 4 people. A traditional place needs 25 or more kitchen crew, servers, hosts, bartenders, managers. The list goes on.
And the speed to launch, that always sounded crazy fast.
It is, relatively speaking. Building out a traditional restaurant, getting permits, everything, that can easily take a year, maybe 52 weeks, according to the sources. A ghost kitchen, especially if it's going into an existing managed facility, could potentially be up and running in about 6 weeks.
6 weeks versus a year. Wow. And that speed must hammer down the initial investment needed.
Dramatically. The estimated capital to get a ghost kitchen startup going might be around $30,000. Compare that to, $1 million? Potentially way more to open a traditional restaurant from the ground up.
30 grand versus $1 million. That's almost a 30x difference, which must directly impact how quickly you can break even.
Exactly. Lower upfront costs, faster launch. A successful ghost kitchen could, theoretically, hit break even in maybe 6 months.
What?
A traditional restaurant, you're looking at 5 years, maybe longer.
Oh.
I mean, you look at those numbers on paper.
Yeah, you totally see why everyone got so excited. It looks revolutionary.
It does. But, like you said, Those advantages often get chewed up by what the sources call the layered cost problem.
Okay, explain that. What are the layers?
This is the killer detail, the thing that really tripped up a lot of early ventures. Okay, so you have your food costs, right? Ingredients.
Yeah.
Standard for any restaurant. But then you start adding layers of fees. The big one, the delivery platform commission.
Uber Eats, DoorDash, those guys.
Exactly. They take a huge chunk, often between 15% and sometimes a staggering 30% of the order value right off the top from the restaurant brand.
Wait, 30%. So if I order $30 worth of food, $9 could go straight to the delivery app before the restaurant pays for the food, the cook, the rent, anything.
Precisely. It's a massive bite. And to deal with that, what does the food brand do? They often have to hike up their menu prices for delivery customers. Higher than if you walked in or picked it up yourself.
Passing the cost to the consumer.
Trying to, yeah. But there's a limit to how much people will pay extra for delivery. And then on top of the delivery fee, there's the fee you pay to the ghost kitchen facility itself.
Ah, the rent for that little 200 square foot space.
Yes. And while the space is small, the sources point out that the price per square foot can actually be higher than a traditional lease in that area, because you're paying for the convenience, maybe some shared equipment, the delivery optimization, and some early models even had percentage rent deals. Meaning the brand paid the ghost kitchen operator a percentage of their sales on top of the base rent.
Yeah.
Another slice out.
Okay, so let me get this straight. The customer pays higher prices. The food brand pays a massive cut to the delivery app. And they pay potentially high rent per square foot, maybe plus a percentage, to the ghost kitchen operator.
You got it. And the expert we mentioned earlier summed it up perfectly. When you stack all those costs, delivery platform, ghost kitchen rent fees, on top of your basic food and labor costs, there's just not enough left for everybody.
Yeah.
The margin gets squeezed so incredibly thin, it becomes almost impossible for the food brand to make sustainable profit, for the ghost kitchen operator to make their investment worthwhile, and for the delivery platform to be profitable while still keeping prices reasonable for the consumer. Something's got to give.
Can we break down those typical costs a bit more? What do the sources say it actually takes to launch one, dollar-wise?
Sure. Startup costs, the initial hit, they estimate in the range of $20,000 to $60,000. That covers things like, getting your essential kitchen equipment, buying it or leasing it, stocking up on your first batch of ingredients, paying for all those permits and licenses we'll talk about, setting up your basic branding, maybe a simple website, initial marketing push, still way less than a traditional place, but not nothing.
And then the ongoing monthly burn.
Monthly costs, once you're operating, they estimate can run from about $11,000 at the low end up to maybe $42,000 at the higher end. Depends obviously on your scale, your location, how much business you're doing.
And the big categories there.
The sources list the usual suspects, but with a twist. Rent for the kitchen space, equipment costs, lease payments, or just maintenance. Utilities, gas, electric, water for the kitchen. Inventory buying ingredients and packaging. And the sources flag this. Inventory is often the single biggest cost component.
Bigger than rent or labor.
Often, yeah. Then you've got labor paying your cooks. Permits and licenses need annual renewals. Insurance liability, workers' comp, essential stuff. Marketing guys got to keep feeding the digital beast. And then, critically, those delivery service fees, those big platform commissions we just talked about.
So yeah, rent and labor might be lower than traditional, but inventory and especially those delivery fees become these huge line items. What about profit, though? If you can make it work, what kind of margins are possible?
The potential range cited is 10% to 30% profit margin. But, and this is a big but, they clarify the average is probably closer to 15%.
Okay.
They give some figures for average monthly turnover sales, basically, which could be anywhere from $50,000 to $150,000.
Right.
So if you apply that 10% margin, you could be looking at a monthly profit of maybe $5,000 at the low end, up to potentially $45,000 at the high end.
That's a huge range.
It is. And hitting those higher margins, that 20-30%, it's really tough. Profit can easily dip below that 15% average if competition is fierce or those platform fees are particularly high in your area.
Man, it really sounds like the difference between 10% and, say, 25% margin is the difference between just scraping by and actually building a real business.
Yeah.
And it all seems to hinge on cracking that layered cost problem, especially the delivery fees.
Absolutely. That is the core operational challenge.
Yeah.
Solve that, and you've got a shot. Fail to solve it, and you're likely joining the ranks of the shakeout victims.
Okay, let's shift to real estate for a minute. That was supposed to be the other huge advantage, right? You mentioned arbitrage of space. What does that actually mean on the ground?
The basic idea is simple. You're not paying for expensive storefront space on a busy street. You don't need people walking by to see you. So you can leverage cheaper rent in locations that just wouldn't work for a normal restaurant.
Like industrial parks, back alleys, less desirable commercial zones.
Exactly. Places where a traditional restaurant would starve for foot traffic are perfectly fine for a kitchen where all your customers come through an app and a delivery driver picks up the food. That was the big cost-saving idea.
But the pandemic threw a wrench in that, didn't it? Something unexpected happened with real estate.
It really did.
Yeah.
The sources point out that, sadly, as many traditional restaurants closed during the pandemic, suddenly there was a flood of what they call second-generation restaurant space hitting the market.
Meaning spaces already built out as restaurants.
Exactly. They already had the kitchens installed, the plumbing, the ventilation hoods, all the really expensive infrastructure was already there.
Mm-hmm.
And the landlords holding these empty, equipped spaces, they were suddenly desperate to fill them.
So they started offering deals.
Good time. Discounted rent, maybe some free months, signing bonuses, more flexible lease terms than usual. And as one expert put it, this sudden availability of cheaper, ready-to-go traditional restaurant spaces kind of stole ghost kitchen's thunder quite a bit.
Because if you're a food brand looking to expand, suddenly you could maybe snag an existing restaurant space for a good price, get maybe better visibility or infrastructure than a basic ghost kitchen unit.
Precisely. That arbitrage advantage, that cost saving from using weird locations, it wasn't nearly as strong when traditional spaces suddenly got much cheaper and easier to find.
Yeah.
But the sources also suggest that might be swinging back again. As the economy picks up, those second-gen spaces are getting leased. So the argument is maybe the scales will tilt back toward ghost kitchens being more attractive again, especially for brands purely focused on delivery, because the upfront cost and launch speed are still way better.
Interesting. And we're also seeing ghost kitchens themselves moving, right? Not just staying in those cheap, out-of-the-way industrial spots.
Yeah, the model's definitely evolving. While plenty still operate some warehouse-type locations, there's a clear trend toward setting up facilities in more central areas. Think central business districts, CBDs, or busy commercial complexes.
Why the shift?
Often the idea is to do more than just delivery. Maybe facilitate easy customer pickup, or act as a central hub, serving multiple virtual brands really efficiently within a dense urban area.
Yeah.
Singapore is mentioned as an example where these modern ghost kitchen hubs are being built right at central city locations.
This sounds like it's moving towards this idea of ghost kitchens becoming like a whole new real estate asset class.
That's definitely a perspective explored in the sources. For commercial landlords and investors, leasing space to a stable ghost kitchen operator can provide reliable, recurring rent. It potentially makes their properties more valuable, boosts their cap rates. That's a measure of investment return. It's also mentioned that the really big players, the established ghost kitchen infrastructure companies, might increasingly look to actually buy the properties they operate from.
Instead of just leasing.
Yeah, to get more control and capture that long-term real estate value themselves.
And this whole real estate angle is leading to some really creative, kind of unexpected partnerships based on the sources.
For sure. Like hotels. We see C3 partnering with Graduate Hotels to handle room service out of ghost kitchens.
Mm-hmm.
Hyatt House is doing something similar in South Africa. REEF Technology partnered with DJ Khaled, yes, that DJ Khaled, to run his Another Wing concept out of a Hilton Garden Inn kitchen near Sacramento.
That's actually brilliant. The hotel gets rent for kitchen space. They might not be fully using, they don't have a headache of running their own full restaurant, but they can offer guests way more food options via these virtual brands delivered right to the room.
Exactly. And the food brand gets a fully equipped, licensed kitchen, super low startup cost, ready-made customer base in the hotel guests.
Yeah.
It's potentially a win-win using existing infrastructure really smartly.
And it's not just hotels, malls too.
Yep. Kitchen United teamed up with big mall operators like Simon Property Group and Westfield. They created these hubs inside the halls where shoppers can order food from multiple different virtual brands all in one go and then just pick it up while they're already there.
Yeah.
Grab, go, eat, I think they call one concept.
So the mall becomes like a virtual food court, almost a mini logistics center.
Yeah, pretty much. Yeah. And we saw this pop up in other places too. Universities use similar setups, like Chartwell did on some U.S. campuses during the pandemic when dining halls were shut or restricted. Cool. Even airports are experimenting. REEF launched a virtual food hall at Raleigh-Durham Airport. Order from different brands on your phone, get it delivered to your gate.
Wow. So the big picture is these large commercial spaces, they're being reimagined. Part traditional retail or service, part maybe logistics hub. part cloud kitchen serving multiple brands, leveraging the people already there in a totally new way.
It really shows the flexibility of the model when you combine it with strategic real estate thinking. Finding ways to put the kitchen closer to customers or convenient pickup points, not just hiding it away.
Okay, so you figured out the real estate puzzle, found your spot, no dining room, but you can't just fire up the stoves, right? There's still bureaucracy. Laws, licenses, that's got to be a big piece.
Oh, absolutely. Just because the model seems simpler operationally in some ways doesn't mean you escape the red tape. Your solo food business, you've got local, state, federal regulations to deal with. It's complex, and it definitely varies depending on exactly where you set up shop.
So what are the must-haves? What licenses and permits do the sources highlight?
Okay, baseline. You need a standard business license. That's your basic permission to operate legally in that city or county. Usually needs annual renewal, requires your legal business name, your EIN, employer identification number from the IRS.
And deciding your business structure matters early on for this.
It does. You've got choices. Sole proprietorship, partnership, LLC, limited liability company, or a full corporation. The sources say LLCs are pretty common for ghost kitchens. Why? Well, it offers liability protection for the owners, separating personal assets from business debts, which is crucial. It's also generally more flexible in terms of taxes and management than a corporation, but more formal and protective than just being a sole proprietor. Your choice impacts filing requirements too. An LLC usually files articles of organization with the state, while a sole proprietor might not need separate formation docs, just the business license.
Makes sense. And then obviously health and safety, food permits must be huge.
Absolutely critical. Usually called a health permit or sanitary permit or food establishment permit. Issued by your local health department, this is the big one, ensuring your kitchen meets all the sanitation standards. It involves tough inspections, and often you have to submit detailed plans of your kitchen layout and procedures for review and approval before you even start building or operating. Non-negotiable. You mess this up, you're shut down.
What if you want to sell beer or wine with the food for delivery or takeout? That seems like it would add complexity.
It adds a lot of complexity. This is governed by really specific, often confusing state and local laws that vary wildly. The sources give examples. California, at the time they were written, generally only allowed alcohol pickup, not delivery, unless it was a part of a meal kit. Georgia allowed delivery of sealed containers. Hawaii allowed pickup, delivery, or takeout of unopened drinks. So you really have to know the local rules. Plus, the sources mention things like needing identifiable delivery drivers, maybe with IDs or uniforms, especially for alcohol, to ensure accountability and age verification.
Right. And what about the people actually cooking the food? Do they need special permits?
Yes. Anyone handling food usually needs what's called a food handler's permit or certificate. It shows they've had basic training in safe food handling, things like temperature control, avoiding cross-contamination, proper hygiene, waste disposal. And then anyone in charge, a manager overseeing operations and food safety, needs a higher-level food manager certification. That's more in-depth, focusing on managing the overall safety systems.
Any digital regulations to worry about, maybe for marketing?
Good question. Yes, especially with email marketing. If you collect customer emails for newsletters or promotions, you absolutely have to comply with data privacy laws like CAN spam in the U.S. and potentially state laws like CCPA in California. Getting proper consent is key. Can't just spam people.
Is there anything a ghost kitchen might avoid compared to a traditional restaurant, regulation-wise?
Well, one interesting point the sources raise. If you operate within a managed ghost kitchen facility, like renting a stall from Cloud Kitchens or Kitchen United, the facility operator might handle some of the broader building-related permits, like the main building occupancy license, zoning compliance. The individual food brand renting the space might not need those specific permits themselves because the landlord holds them. But you still need all your own business licenses, health permits, food handler cards, etc.
Okay, so front of house is gone, replaced by apps. But the back of house is still very much regulated, lots to track.
Definitely. You swap some complexities for others. Food safety, labor law, digital interactions, delivery logistics. It's all regulated.
Let's talk about the team then. You mentioned way fewer staff. What does that skeleton crew usually look like?
Yeah, that lower labor cost is a huge draw. You basically eliminate the entire front of house payroll, no hosts, servers, bussers, bartenders. It's purely about production.
So the main roles are?
Cooking staff. That's your core team. Chefs, line cooks, prep cooks, and then potentially delivery staff. But like we said, that's often outsourced completely to the third-party apps. So maybe just the kitchen crew.
But even hiring a smaller kitchen crew can be tough right now, right? The labor market's still tight.
It absolutely is. The sources definitely acknowledge that ongoing competition for good kitchen staff. Finding experienced cooks who are reliable and can handle the pace of a high-volume, delivery-focused operation. It's a challenge.
Any tips from the sources on how to actually find and keep good people in this market?
Yeah, they stress being really clear and detailed in your job descriptions. Spell out the duties, the skills needed, the hours, the pay, helps attract the right people, sets expectations. Using online job boards like Indeed is obviously key to get the word out. And critically, offer competitive pay and benefits. You have to match or beat what other food service jobs in your area are offering if you want to attract, and just as importantly, retain good staff. Keeping employees happy cuts down on expensive turnover.
What about how you structure that team? Is it always full-time, or is there flexibility?
The delivery business is often peaky, right? Lunch rush, dinner rush, weekends. So flexibility can be built in. Sources mention using on-demand staff for those busy times or maybe short-term contracts, especially if you're just starting or testing a concept. But as the business grows and gets steadier, moving key people to full-time roles brings stability and consistency. Technology helps here too. Scheduling software is mentioned as a tool to manage flexible shifts and make sure you're covered during those peaks.
Okay, kitchen's licensed, staffed, ready to go. Now, the huge challenge, getting people to actually order from you when they can't even see you exist physically, marketing must be absolutely crucial.
Crucial doesn't even cover it. It's arguably more important for a ghost kitchen than a traditional restaurant. You've got zero foot traffic, zero curb appeal. No chance for someone to just wander in. Your entire connection to the customer is digital. That requires serious investment, serious focus, and probably some serious expertise in digital marketing and branding.
So what are the key strategies the sources highlight for making that connection?
Building a really strong online presence is job one. That means a clear, appealing brand, good logo, looks professional, a functional website, easy to navigate, ideally allowing direct orders so you maybe bypass some platform fees, and active, engaging social media, Facebook, Instagram, TikTok, wherever your target audience hangs out.
Paid ads too?
Oh yeah. Targeted digital advertising is essential. Google ads, social media ads aim precisely at the demographics and geographic areas you want to reach. That's how people discover you. High-quality photos of your food. The sources hammer this point home. On a delivery app, that picture is often the only thing someone sees first. It has to look amazing, make them stop scrolling, make them hungry.
We saw some massive successes using influencers too, right?
Yes. The Mr. Beast burger phenomenon is the classic example. Partnering with a huge influencer gives you instant reach, instant brand awareness, taps into their built-in audience. Now, obviously, not everyone can partner with Mr. Beast, but the principle holds. Finding smaller, relevant, local influencers or personalities can still be a really effective way to get noticed without spending years slowly building organic reach.
But you still lack that physical touch point. Are there ways ghost kitchens can try to build real-world recognition, maybe build some trust?
The sources suggest getting out there strategically. Participate in local food festivals. Set up a pop-up booth at a farmer's market. Get involved in community events. Let people actually taste your food. Meet someone from the brand. Build a little connection. It can really help build loyalty beyond just being another name lost in the app skull.
Makes sense. Okay, so you get the marketing working, orders start coming in. What are the key operational strategies needed to actually run profitably day to day?
First off, really knowing your target market. Who are you cooking for? Busy professionals needing quick lunch, families wanting easy dinner, students looking for value, a niche dietary group. Understanding the customer dictates your menu, your price point, your marketing messages.
And the menu itself has unique considerations for delivery.
Absolutely critical. The number one rule, focus on food that travels well.
Yeah.
Dishes that get soggy, cold, or just fall apart in transit. Huge risk for bad reviews and lost customers. Keep the menu streamlined. Focus on items you can make quickly, consistently, and profitably. Analyze your food costs, your COGS for every single item. Tips include prepping components ahead of time during slower periods and offering some customization options without making the line overly complex during a rush.
And packaging becomes super important then to protect that food.
Hugely important. You need to invest in good quality packaging, stuff that keeps hot food hot, cold food cold, prevents spills, and keeps the food looking appetizing when it arrives. A fantastic meal can be totally ruined by arriving in a crushed, leaky container after a 30-minute bike ride.
Any ways to boost revenue beyond just single delivery orders?
Yeah, the sources suggest looking at group orders or catering. Think office lunches, small events. These can bring in much larger average order values, tap into different customer types, maybe build some B2B relationships for more stable recurring revenue.
And keeping an eye on the competition is always key.
Always. You need to know who you're up against. That includes traditional restaurants doing delivery, the big fast food chains, other ghost kitchens in your zone, even food trucks. Look at their menus, their pricing, who they seem to be targeting, and definitely read their online customer reviews, learn from their successes and failures. This helps you find your niche, figure out where you can compete, maybe on price because of lower overhead, maybe on quality, or specialization.
And finally, technology seems like it has to be woven into everything for efficiency.
It's fundamental, not just helpful. You need a robust point of sale, or POS, system to manage orders flooding in from multiple apps, plus maybe your own website. CRM, customer relationship management software, can help you track customer habits, personalize offers, build loyalty programs. Employee management software, like the 7 Shifts example mentioned, is key for scheduling and communication with staff. Tech minimizes errors, speeds things up, gives you data to make smarter decisions. All of that directly impacts your bottom line and your ability to handle volume.
Okay, wow. We've covered a ton. From the crazy hype and the inevitable shakeout to the nitty-gritty costs, the surprising real estate dynamics, the regulatory maze, staffing, and all those crucial operational and marketing plays. Looking ahead now, what are the big, persistent challenges that this ghost kitchen model still really needs to nail down to truly succeed? And what future trends might shake things up again?
Yeah, the sources really zero in on 2 major lingering challenges, the same ones that tripped up many of the early players and are still the key battlegrounds: quality control and cost.
Why are those still such big hurdles, even after all this time and the consolidation we've seen?
Well, with quality control, it boils down to consistency, especially if you're running multiple virtual brands out of a single kitchen space. Maybe different staff on different days, different procedures. How do you guarantee that the burger from brand A is just as perfectly cooked and packaged as the salad from brand B, coming off the same line, maybe even made by the same cook? It takes this blend of real food service, like hospitality expertise, plus the tech. It's tough. Vertical integration, where one company tries to control the kitchen, the brands, and the delivery, might help. But doing all of that well simultaneously is incredibly hard and expensive.
And cost is still the elephant in the room, even with lower rent and labor.
Absolutely. That fundamental problem of layered costs, especially those crushing delivery platform fees, it hasn't magically disappeared.
Yeah.
Ghost kitchens are still fighting to find ways to either negotiate better rates with the platforms, which is tough when the platforms hold so much power, or shave down other operational costs even more, or just drive insane volume and efficiency to absorb those fees and still make a profit. It's an ongoing struggle.
It really sounds like getting this model truly right takes not just capital, but also time. Maybe more time than typical tech VCs are comfortable with.
That's a really sharp insight from the sources, this idea of needing patient money. The time it takes to iterate, to really perfect the operations, build a loyal customer base, figure out the cost puzzle. It might just be longer than that typical VC timeline looking for a quick 5-7-year exit. It might need investors who really understand the food business, the lower margins, the operational grind, maybe more traditional hospitality investors, not just pure tech money.
What about new tech? Anything on the horizon mentioned in the sources that could actually change the equation?
Robotics gets mentioned. Not like, robot chefs taking over completely anytime soon, but maybe modest adoption for really repetitive tasks. Think automated burger flipping, fry stations, maybe some basic assembly. The idea is it could potentially trim labor costs and boost consistency down the road. But the upfront investment is high, and scalability is still a question mark.
And then there's the really out there idea, the metaverse.
Yeah, the sources touch on that speculative potential. Could virtual worlds impact how we order food? Maybe virtual food halls where your avatar browses, orders, and it gets fulfilled physically. Streamline payment via digital wallets. It could open new marketing channels, maybe reduce reliance on physical discovery if it all happens online, possibly enhance convenience further. But that feels pretty far off from widespread practical use right now.
It's a good reminder, though, that even a model born from digital needs to keep evolving, especially as the world, becomes less isolated than during the peak pandemic years.
Exactly. The model needs to figure out how to thrive in a less isolated world.
Yeah.
How do you build that community or experiential connection that people crave, even if your primary interaction is digital? Maybe through really smart pickup integration, maybe through online community building. And those cautionary tales like Butler hospitality just vanishing overnight, they really underscore the need for solid fundamentals. You can't just chase the next shiny object. You need prudent management and rock-solid operations today.
So, the bottom line seems to be, despite the really rough ride and the shakeout, the projected market growth suggests there is still opportunity here. But it's definitely not an easy win.
Not at all. It's intensely competitive. Success going forward, based on everything we've read here, really depends on cracking those core problems, quality and cost, achieving real operational efficiency, finding a way to stand out, to differentiate your brand in that crowded digital marketplace, smartly managing your relationship with delivery platforms, or finding creative alternatives, and maybe finding those innovative ways to integrate with the physical world, like those hotel or mall partnerships.
It's definitely a complex picture. You've got these really compelling advantages on paper, speed to market, lower initial cost. But they're countered by these equally huge hurdles, those layered fees, maintaining quality from a distance, just cutting through all the digital noise to build a brand that people actually remember and choose.
It's exactly. The initial, maybe overheated excitement might be gone. But that core consumer demand for convenience, for having food delivered, that's not going away.
Right.
So the ghost kitchen story, it isn't over. It's just entering a more mature, maybe tougher phase, one where the survivors will be the ones who truly figure out a sustainable, profitable model.
Which leaves us, and you listening, with a pretty interesting question to think about. Will this ghost kitchen model ultimately redefine how we get our prepared food? Will it become this dominant, invisible, engine-powering delivery and takeout everywhere? Or is it destined to be more of a valuable, but still pretty complex niche within the bigger food world, always wrestling with that fundamental tension between delivering quality and affordability when you've got all those costs stacked against you? And maybe next time you pull up that delivery app, think about how your order might be shaped by these evolving realities, the successes and struggles happening inside those ghost kitchens we've talked about today.